Hey guys, this is Trade with Edge, and in this video I will show you on how to short into a gap up. So first of all, if you really want to short into a gap up situation, you really want to have stats that prove that your overall thesis is correct. So you can manually backtest via Excel and go to Yahoo Finance, for example, to find all daily examples going back to like 5 years or something, or the whole history of a specific stock. Or you can have like a written piece of code, like a script. Here for this example we use Thinkorswim platform. Most of you guys should really are familiar with. So yeah, as you see, yesterday was a day that VISL gapped once again. So we see this here in that example that we gapped a little bit. So my first question was, okay, where is my edge, and most of the times I short into a gap up. I have a specific kind of criteria I'm looking for, but the first thing, as mentioned before, should be really, do we have an edge with our thesis? So if my thesis is short, I really want to have stats that prove that a short bias on this specific kind of gap up stock makes sense. So as you see, I typed in like if it gaps above 10%, this specific stock, VISL, and I check the past 5 years. So you see 5 years worth of data on the 1 day chart, and you see, okay, we track all the data back 5 years, and we have a total of 46 samples. So in the 5 past years, this stock gapped above 10%, and the count was 46 samples. So, and then we have all those specific kinds of stats. And most important for me overall is, since I have a short bias, is how often does it close red? So red to green moves. Does it close above the open? Does it close below the open? And you see here, in total of 33 counts, like 72% of all the time it closes red. So for me, in that, just something above 65%, 70%, maybe 80%. So at least I want to see like 65% going higher. So first of all, I know now that my overall short bias is pretty good, right? So 7 out of 10 times it would be good to have a short bias on this specific stock if it gaps above 10%. So yesterday it was gapping above 10%, so it still made sense to think about my short bias. So the next thing I want to look at then is, where does it potentially open? So yesterday we saw that it opened, and maybe change currently to the 5-minute chart. We'll do this at a later point in time. So the open is, as you see around here, is the open price was 111. So then I asked myself, okay, if my short thesis should be shorting into the gap, how much potential does this specific stock have to the upside? So what I do is, then I check the average spike. So the same applies. We check the last 5 years for this specific kind. We still have the 10% input gap. So now we know, okay, if it gapped over the last 5 years at least 10%, what was the average spike? And the answer is 11%. So now, let's do some math. So I have a calculator right here. I will calculate 111 times 1, and we have an average spike of 11%, so times 1.11, and that makes 123. So 123 is the calculated top. So I repeat it. I take the open print. The open print is 111. You see it right here. Now 111 times the average spike. This is when I really think, oh, we have the average spike seen, so that could be the top, but be careful, it's just an average, So I always say, okay, I have a specific kind of setup I want to trade, but I put it within the overall stats, but without stats, no setup as well. So it is all kind of related to each other. So I had my setup, okay, I want to short it. I have my strong thesis, yeah, and the stats confirm that my thesis is correct on this stock. And now I know, okay, at least it could go to 123. It's just, it could, you know, be prepared, lay out different kinds of scenarios. So 123. So let's do a short price line there, 123. The calculated potential average spike. It's 120. Yeah, let's do 122 because yeah, the cursor is kind of weird at the time. So 123. Yeah. So we know what happens, right? And the next question is, okay, where is the average low from the open? So the average low from the open, it's yeah, the same principle for the top, for the bottom as well. So if, yeah, so when close below the open, so in all those 33 examples, the average low from the open was minus 16%. So minus 16% is 1.11 times 0.84, so 93, you know, 93 cents. So it's right here, 93 cents. So this is the potential area we could see on yesterday, you know. So I go back to the 5-minute chart, and this is where I'm trading on, and you see currently it's setting up exactly the same way like yesterday, but it's pre-market, so I make it real quick to yeah, go over trading as soon as possible. But you see, it got there in pre-market, it moved to 128 top there, it got back, so it rejected hard. So this is what I'm tracking as well for my personal trading setup, but now it really makes sense to me. So I ask myself the same questions like I just did, you know, and I know, okay, 123 was a line, and let's go here and make it really specific, 123. And I see, okay, if it really spikes into this area, this is great. Why? Because we already rejected there. So I now know that I have like of my setup I'm watching. You know, you could either risk high of day, pre-market high, you could risk the next important line on the daily. It doesn't matter. What I just say is, okay, we all have kinds of specific patterns we want to trade. This could be like an volume exhaustion here on the 5-minute, like another, like the rejection you see here, you know, the volume stuff below that line. But now you are really prepared. Now you know the odds that this actually goes below 111, that it closes in 72% of the time below 111, you know, because this is the open print. So if you know this and you see this action, and we already know, okay, on average it just spikes 11%, it now makes perfect sense. You now have more confidence in your specific setups because it's, yeah, supported, the thesis is supported by actual stats, and not just stats based on your trading in overall, you know. So it's not just your trading. So you did maybe 100 trades and you proved that you are trading consistently. Okay, that's pretty good. Yeah, you're constantly profitable trader. But on the other side, what you really want to do is you want to track a specific stats for a specific kind of stocks. So sometimes if we go back to the let's say to the daily chart, 5-year 1 daily chart, it just made sense to short this stock, you know. And it may happen to you that you, out of your overall 100 trades, that maybe 60 trades out of those had specific criteria on the stock side. So it just made sense for you with your specific criteria. So it's not just like oh yeah, I nailed it, but it had a reason to do this, you know. And there are other stocks out there like ACHV or stuff, you know. So it closes 81% of the time red and all the stuff, you know. But if you take other trades like I don't know, I currently watch on my screener. Let's go to ATNM, and okay, you see 90% of the time, you know. So you have a huge edge by just using that tool, and not, you don't have to do it manually. So the takeaways from this video is, so the takeaways from this video I just showed you are, you have to have an edge, you know, and an edge is not just defined by a trading setup. Rather, you have to have a thesis first, then a specific technical or maybe fundamental edge. And if you combine both, you will have much more impact in the markets, much more success rate, because now you really know, okay, if XYZ will happen and I put this into my main thesis, my main statistics for a specific stock, then I can really accelerate my learning curve. I can accelerate my account. Yeah, so I hope that helped for you. If you are interested in this kind of script, it's a little script you can just import to Think or Swim. Just click the link below, and otherwise I hope you really learned something in this video. See you in the next one. Bye.